Today's interview is with Alina Trigub. Alina is amazing. She came over here 30 years ago from the former Soviet Union with her mum, and she has built herself up to not only working as a tax accountant, but then in IT, to now investing in real estate, and not only in real estate, but as a syndicator, doing her own deals and investing in multifamily and bringing other people along with her for the journey. So she's got an amazing story from what she's achieved and all the information that she's willing to share with us. So stick around for all of that. As always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE podcast and give me a 5-star rating and write me a review if you think it's worthy. And I'm looking to speak to as many of you as possible. If you're interested in real estate, whatever capacity that is, I'd love to have a conversation, see if there's any way whatsoever I can help you. So if you go to the link in the description down below, or you go to wrestlingwithrealestate.com and sign up there, we can hop on a call and just have a great chat about real estate. So make sure you don't forget to do that. But before all of that, stick around for today's awesome interview with Alina.
My pleasure.
Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Alina Trigub. Hey, Alina.
Hi, Barry. Excited to be here.
I'm
scared
excited
a little bit to be with a former wrestler.
I'm excited to have you on the show. We were just talking
Thank
a bit
you.
beforehand, having a fun conversation. So I'm excited to share that with other people, right? But before we kind of dive in, do you want to give people an idea about your background, what you've been up to, and what you're up to these days?
Sure. Thank you, Barry. So I came to US almost 30 years ago as a poor immigrant with nothing in our pockets with my mom, and decided that I needed to get a degree first of all. Well, my mom already had 2 degrees from Soviet Union where we came from, but she decided that she needed to get an American degree. So both of us ended up in colleges at the same time getting our degrees. So we had to work a bunch of odd jobs just to essentially survive. And since that point, I realized that staying true to the course and being consistent and being determined and sticking to your goals can get you places. And no matter what obstacles we had, like, we did a lot of various jobs from babysitting to cleaning houses to whatever else came our way. But we both graduated from school, so I got my career, she got her careers, and I worked my way up. I started as a tax accountant, and then never really liked it, so I switched my career and turned to information technology, where I spent about 20 years. But while working in information technology, I kept thinking about taxes because my career was progressing and so was my husband's. And I kept thinking that I need to find a way to lower our taxes or tax brackets because we just keep paying more and more as the careers progress. So real estate kept coming up, of course, because it's one of the best ways to lower taxes. And I finally started looking into real estate about 7 years ago. And then uh, pulled the trigger on our first investment in syndications at that time. And after doing it for a number of years and realizing, about all these great benefits, passive income, taxes, impacting communities, and really the power of depreciation and deferring taxes in general if you're doing 1031 exchange, and realizing that none of the folks around me ever heard about this, I decided to start my own company with the sole purpose of helping other people essentially achieve the same results as I was achieving myself, so they can diversify out of Wall Street, uh, build passive income through real estate, and also save on taxes and get all these other tremendous benefits that I was getting through passive real estate investing. So that's how SAMO Financial was born almost 3 years ago. And since I am no longer working as a W-2 employee, although it wasn't my choice, it was COVID's choice, but I'm glad it happened this summer because it gave me an opportunity to turn to real estate as my full-time path as my full-time business, and now I'm solely concentrated on my real estate business and growing it, working and partnering with other people to help them grow and help them invest in more syndications. And that brought me here to meet you and be on your podcast, Barry. I'm excited.
Well, I'm very happy that it did. And I'm very happy to have you here. You've got an amazing story. Thank you for sharing that.
Absolutely.
You said something there that I'll dive back into some other things as well. But I was speaking to someone earlier about this. Isn't it amazing how little people know about syndications and about sort of multifamily in general? I feel like as a aspect, because we're surrounded by it. Like, I do my podcast, I talk to people, I study it, I listen to other people's podcasts, read about it. I'm consumed by it, right? And I'm sure you're the kind of the same way. And so you're surrounded by people, so you assume that everyone you meet knows about it because that's what you're surrounded by. But once you get out of that, it's always amazing to me how very little people understand about it. When I tell people I invest in real estate, they either think I'm an agent or I'm flipping. Either I'm
absolutely.
Right?
That's exactly the case. I keep getting the same response like almost every other time, and more often than not, people assume I'm an agent because I'm a woman. I think they have the stereotype that a woman must be a real estate agent. And Barry, I can definitely relate to your comment about people not knowing about syndications, especially for someone like myself who has undergrad in accounting, graduate degree in finance. You'd think that in schools they would mention something like that, but no. I've never, in my colleges heard the word syndications or private equity, nothing like that. Everything has been learned on my own through my own experiences by accident, finding it on internet, finding bigger pockets, finding like-minded investors, meeting people through meetups in person and talking to folks. But no, it's not highly publicized, unfortunately.
Yeah, why do you think that is?
I think it's done on purpose by Wall Street. If you come to think of it, all of the corporations, major and minor, they all offer 401ks, or whoever offers 401k, it's always through Wall Street investment. So it's not going to help Wall Street if someone else starts advertising. So essentially, it's this big conglomerate that decides that I need to have this monopoly where everything is going to come back to me and not to the world of these private investments, which supposedly easily accessible for folks that have a W-2 job and are accredited investors. It's not that hard to get that status, and yet have no clue, have never heard about this. But Wall Street just doesn't want them to hear about it. That's the power of media.
Yeah,
They bought out all of the media.
I agree, because they're obviously making a lot of money doing what they're doing right on Wall Street, right? They're not hurting for a penny or two. And I think, like you said, they just want to keep it like that. And I think it's also what's always been done will be done to some extent, right? It's hard to change that groove that everyone is in, right? You just invest in your 401k, your IRA, whatever. And then when you're 59 and a half, you kind of access it through hopefully the index funds or whatever you've invested in all that time. Hopefully it's gotten up, and then you don't have a 2008, 2009 situation where you lose 50% of your life savings,
exactly.
And then hopefully you can also, you don't outlive your retirement fund as well, right? It's just kind of, when you really sit down and think about it and talk to people about it, it's just kind of a crazy system to kind of, that everyone, and that's their goal as well. It's not only like just what they do, it's their goal as well. It's just crazy to me sometimes.
It is crazy, and I often like to use the example of Starbucks, because a lot of people like to drink coffee. So and I say, like, if you and I start drinking 6 cups of coffee instead of 1 every single day, do you think it will have any correlation towards the Starbucks stock? Absolutely not. That's the problem. We have no idea how the stock will behave, regardless whether consumers like you and I will start drinking more or will not start drinking more. And that's the challenge. And that's what makes real estate stand out, because real estate is all based on the risks that are calculated. And for me, as a former accountant, it's easy to understand. Everything is based on numbers. So you put the numbers in and you get the numbers out. And even though it's projections, but these projections based on the actual financial statements that exist today for the property, what can be better where you take that Starbucks stocks and you buy it And it essentially means you take in the dart and throwing it in the dark without knowing, is it going to go up or is it going to go down, and what's going to trigger it going up or down. That's the huge difference
Yeah.
between the two.
Yeah, for me, yeah. I don't invest anything in the stock market because it just drives me crazy. I can't understand, like, the economy tanks and the stock market goes up, right? And
Yeah,
the stock market isn't the economy. I understand all that, but I don't know. It just doesn't make sense to me, right? I like, also, like you said, in real estate, you have so much more control, right? Control and predictable results.
exactly,
it's
exactly.
it's a lot more predictable. Now nobody can predict everything, but it's a lot easier path to kind of seeing where your investment will go. Now you said
Absolutely.
you started investing in syndications 7 years ago, right? Is that correct?
Yep.
So
Yes.
I know it's syndication now is like the hot word, right? Everyone wants to get in because it's a great investment and it makes sense and it's a great model. What was it like 7 years ago? I'm guessing there was a lot less competition back then.
Well, I wasn't looking for competition. I was passive investor, but even finding a syndication was a lot more challenging than these days. I think nowadays a lot more people advertise and put their investments on social media, and then you see a lot through the events that we go to, whether they're in person or virtual. In the past, it was still it was a matter of going to the events or finding out about something through grapevine. The friend of a friend of a friend who found this gave this to me, or this is the accountant who did the taxes for another investor who invested in such and such syndication. So it was basically getting through that grapevine and finding out people that have been investing and finding out about investments through them. Yeah, it was a lot harder.
Yeah, that's
Unlike
interesting. Yeah, because
now.
now you can't get very far without tripping over a syndicator, right? They're everywhere.
Yeah,
It's
yeah.
both good and bad, right? It means more competition,
I
but
I
like,
haven't checked TikTok. Are they on TikTok? Do you know?
I don't know. I've stayed off that. That's not kind of my kind of platform, but I might have to
Yeah.
give it and go and join that at some point. But I'm sure they are. I'm sure they are. They're everywhere right now. So going back 7 years, so you invested as a limited partner 7 years ago. What brought you to syndication? Because obviously right now, right, you can, as we talked about, it's everywhere and you hear about it, and well, it's not everywhere, but it's a lot more advertised and it's a lot more seen, right? But back then, how did you come across that model? How do you come across that type of investment?
Sure. So my initial strategy was to find smaller multifamilies locally where I live in New Jersey, but the numbers just wouldn't make sense to me. I was looking for a long time, almost a year, and couldn't find anything. And so after looking for that very long, I decided to switch to out-of-state investing strategy. And as a part of my research, by accident, I came across the world of syndications and started digging deeper and started looking into the strategy. And when I realized that it was a viable strategy for me to start investing, I started looking for the investment. And the first one was very scary, because you were essentially putting your hard-earned money with someone you've never met before, investing in a property you've never seen before, and relying on the paperwork they were presenting. So as a former accountant, again, I decided to do my own due diligence. So I researched the guy, I researched his background, he checked all the boxes in terms of his education, his track record. I actually, by accident, I got lucky because one of the emails he sent, instead of BCCing people, he CC'd people on his list. So I literally reached out to every single, it wasn't a big list, maybe 20, 25 people, but I reached out to every single person on that list. And granted, not everyone responded, but I think about 15 to 20% of people responded. So I got to talk to people, and some of them have invested with him in the past. So that helped me make the move, because I knew that it wasn't provided by him, but the people essentially shared references uh, based on their experience and weren't pushed by him. You know how always people try to give you their best customers. This wasn't the case here because it was accidental. So made me a lot more confident, and I invested, and it turned out to be a great investment. And after that, it's literally, it's a trickle down effect. Once you do the first deal, that's exactly like people say, it's a lot easier. Then I almost literally almost right away invested in second, third, fourth, and I don't remember how many. And after a few years, I started realizing and telling my friends, this is what I'm doing now. And people like, what is syndication? What is private placement? All these terms that no one ever heard before. Um, and I was talking to my colleagues at work. I was talking to my friends, a lot of them working at Wall Street, because we're in New Jersey, we're very close to the city, so most people work in brokerage houses and investment banks. And the first question that would come up from Wall Street people would be, is this a REIT investment? I'm like, no, it's not a REIT. So I started digging deeper and started to research to understand the difference between REITs and private placements. And I even wrote an article, or maybe a couple articles about that as well, to show the difference and the tax benefits that you will not get through REITs, that you will get through private placements. And all that kind of led me to the point where I realized there is a gap. Folks are investing in stocks, bonds, mutual funds. They don't really know much about real estate. And while they're interested, they don't know how to access these investments. So I need to help them. I need to bridge that gap. And out of this, the idea of my own company, SAMO Financial, was born, to solve that problem, to help other people start investing passively and start diversifying their portfolio out of Wall Street into something that's a little bit more um, projected and a little bit more calculated over risk, and not like Wall Street. And that's how I started out, and that's what I'm doing to this day, and enjoying it very much.
Yeah, I think it's much needed, right? I know I said that there's more and more syndicators out there, more groups doing these type of deals, but I think it's needed, right? I think it's a good thing. I don't think, maybe in terms of competition for people like us who want, want to find better deals, it's harder. But in terms of the investors themselves, the more opportunities they have to invest in the right group and in the right investment, but done right, I think it's much needed, because like you said, there isn't much other options for people, and it's such a great investment to sort of diversify, or even put a major chunk of your money in, because you get good returns. You don't have to do much. It's pretty passive, right? As sort of
Yeah.
vetting the syndication and vetting the team and vetting the market up front, and you get tax benefits. You get appreciation, and you get to use other teams' experience and people's experience, right? Because when you start out in real estate, it can be quite intimidating and a lot can go wrong. But if you're using people's success that have had success and their experience, well, it puts you on a higher level to start off with. So I think it's much needed. You said there that people confuse syndications with REITs, right?
Yeah.
For people who maybe don't know, what is the biggest difference? What are some of the differences?
Sure. So REIT, which stands for Real Estate Investment Trust, is essentially treated as a mutual fund, and outside of a bunch of requirements, which I don't memorize, but I do have them broken down in my article, which I'm happy to share with you if you want to share with your listeners. The main difference is REIT's income is treated as ordinary income. So for someone who is a W-2 employee, if they are, let's say, in 32% tax bracket, whatever income they will get through REIT will be taxed at that 32% of their tax bracket, where private placement through syndication will allow you to tap into depreciation of the project, which will in turn allow you to most likely have paper losses for the first several years. So essentially, while you may be getting distributions from the beginning, you will not be taxed for these distributions for a number of years because of the depreciation and because you will have paper losses. So not only you're not taxed at all, but at the end of the day, when the property is sold and hopefully sold at a gain, that gain can only be taxed at a maximum of 20%. It's typically between 15 to 20%. So it's not going to reach your tax bracket of 32%. So from the beginning, you're saving at least 12% on a syndication. Definitely much more, because even though you're taxed on all these money later, but think of the economics, and think of what's happening with the dollar. Dollar loses its value. So the longer you wait to be taxed on it, the less it's worth in general. So you're saving a lot more by investing in real estate from a tax standpoint, and you're making a lot more from
I was going to
that
say there's, I
standpoint
think
as
it's,
well.
yeah, I think there's more upside on syndications as well, right? Because REITs you'll get what, 5-6% maybe at best, whereas a lot of times with syndications, they're offering a 7 or 8% preferred return on plus you get to benefit in the appreciation of the property as well. So
True, true.
yeah. What was I going to say? I've forgotten what I was going to say there. This is the my mind goes blank sometimes. So let's go back to what you're doing now. So you've started, you've gone from that's what I was going to say. Sorry, let me go back. Is how were they setting up the equity splits 7 years ago? Was there, because obviously I'm guessing there was higher returns maybe at that point.
The returns were slightly higher. The splits and the waterfalls, all of that has existed in the past. Granted, it has been changing and evolving over time because of the needs of the investors, but returns were a little bit higher. But just like the economy, everything is cyclical, everything goes up and down. So I'm sure the returns will go up essentially. But again, given where we are with the economy, the downturn, all the job losses, I think real estate is doing pretty well in comparison with other industries in general, and especially if you look at multifamily or even mobile home park, self-storage. Unlike office space or maybe hotel space, which are suffering a lot, especially office space is suffering the most, at least in New York City. Majority of other real estate asset classes either doing okay or thriving in this economic climate.
Yeah, yeah. Yeah, that's interesting. Yeah, it's such a good asset class. I think it's showed during everything that's happened during the pandemic how strong it is, right, and continue to be strong, right. It's a simple term, right? Everyone needs somewhere to live, so I think that's that's
Exactly. And it's a matter of concentrating on the markets where the demand is higher than the supply. If you look at some of the secondary markets, like if you notice, a lot of larger employers now are moving into markets where there is the right infrastructure, great climate, maybe no income tax. And Texas is a great example. A number of companies just announced their move, I believe, to Dallas. Companies are still moving to the Carolinas and even to Florida. And a lot of companies are leaving New York City for that reason, because it's too expensive. The COVID has made a huge impact on the companies. They had to close, let employees work remotely. And a lot of employers are realizing that it's a lot more expensive to maintain space in Manhattan. So they are having much higher vacancies than they had in a very long time because of all these reasons. And the employers are moving to the markets that are more sustainable and where people want to live because of the economic conditions in general. So yeah.
Yeah, that's a good point. Yeah, yeah. The market is very important, especially right now, right? Like you don't want to be in California,
Yes,
right? California, New York type of areas right now because everyone's kind of leaving.
exactly.
Yeah, yeah. So you went from the limited side, right, being a limited partner, being passive, to wanting to being active. What caused that? Was that because you saw that your friends and family were interested and that you wanted to help those people?
Yeah, absolutely. So that was my reasoning. I wanted to help other people essentially follow my path and achieve the same results or even better than I was achieving. So everything I'm doing is based on my footsteps. I put a lot of efforts into education. I remember how challenging and frustrating, as you mentioned, it was for me at the beginning to understand what syndication was, how it was working. So I've been putting tons of educational materials, articles and whatnot. I'm now working on putting a bunch of videos together where I'm going to continue explaining stuff through videos, because some people are just visual and they prefer to hear things versus read things. So I'm going to continue doing that, helping people get educated so they can understand how to invest in syndications, helping them understand that they can invest not only if they have cash, but also they can take some of their IRA money, convert it to self-directed IRAs, and diversify their portfolios even further with the self-directed money, and help them understand the need for diversifications, how various asset classes move, and invest in multiple markets in various asset classes and have a well-diversified portfolio. So that's essentially my goal, to help as many folks as possible to go on this path.
Yeah, very cool. Can I ask you, because it's in the background for anyone who's watching the video, the name of a company is SAMO Financial. Where did that name come from?
SAMO is the initials of my family, my two kids, my husband and myself. So it's Sophia, Alina, Max, Oleg.
Oh, very cool. Has a good ring to it as well, as involving the family. Maybe you can give the kids some of the money for that, and then write it off as taxes, right? Because of they own some of the name. Yeah,
that's the plan. You know, for someone who came here with nothing, and my husband pretty much had a similar upbringing. He's also from former Soviet Union. We both immigrated with our moms with nothing in our hands, and coming from nothing into having a well-diversified, built-up portfolio. For us, it's very important to build up wealth for kids and future generations, so they don't need to suffer and go through the challenges and obstacles that my husband and I went when we came here when we were younger.
Yeah, it's amazing what you guys achieved. It's so cool to hear, right? You know, it's the real American dream, right? It's real for people. I think it's so cool that people are able to do that.
Exactly, Barry.
Yeah, so cool. Well, thanks for sharing that story. It's been really interesting hearing like how you've grown and the reasons why you went into it, why you're continuing to invest in, and kind of like me, right? Why we love syndication, why we think it's great, and you know, just even an insight on what syndication is versus REITs. But as this show's, yeah, thank you. As this show's called Wrestling with Real Estate, I like to ask some wrestling-related real estate questions.
Go for it.
So the first question is, what would your wrestling name be if you picked one for yourself?
I think it would be grit. A lot of people tell me that I stand out for my tenacity. I don't typically like to give up on something I start easily, or I should say, I rarely give up on things. I tend to continue. So yeah, grit.
Grit, okay. And then every wrestler has a special move, right? It's their biggest strength. What would your special move be in real estate? What do you think? Finding deals, underwriting, meeting people?
Probably relationship building. Early on, I read Dale Carnegie, How to Win Friends, and that book made a huge impact on me, and I've reread it multiple times since. And I'm a huge believer of building a true relationship with people and not looking at them as numbers, but looking at them as humans, and understanding them, understanding what drives them, why are they doing what they're doing, and what I can do as an individual to help them achieve whatever they want to achieve. And you know, some are building it to have a retirement nest, some want to help kids with colleges, some are just doing it because they want to retire early, or maybe build a charity or help someone else. So I want to help them achieve their dreams, whatever those dreams are, and that's what I'm doing through the work in SAMO Financial.
Very cool. Yeah, I think that's a great book. I love that book. I've listened to it a number of times. It really is a good book. What's been the biggest body slam you've taken in your investing career, you think?
Body slam, like the hit?
Yeah, something that went wrong. Yeah.
Oh, yeah. I like how was that Radcliffe calls those experiences seminars. So yes, I had a number of expensive seminars in my career. I guess one of the early ones before I would call myself a real estate investor. My husband and I bought a property in Philly. This was during the real estate boom, which later became crash. So we lost a ton of money because we just bought it because of our friends were buying in the area. So we didn't do any research, just bought it because it looked good, and ended up, paying for the consequences by selling it at a huge loss. But we were happy to get rid of it.
Mm. Yeah.
This was a while ago, like, I don't know, 12, 14 years ago. Yeah.
Okay. Well, you're here to tell the story, so that's good that you guys bounce back. And sometimes it's you need those painful lessons, or you don't
Yeah.
need, but it's those you teach, right? Unless it's painful, you don't always. I know for me anyway, I don't always learn the lessons unless it's painful sometimes, right?
Right.
You hear people
Exactly.
people can tell you, people can show you, but until you experience it yourself, it's what it takes sometimes to learn.
Agreed. It's human nature. Until you experience it yourself, like I'm trying to teach my kids certain mistakes that I made myself, so they don't repeat the same mistakes. But it's like, it's okay, mom. Yeah, I'll get there when I get there, essentially. So yeah, I'm sure some sinks in, but not everything, because it's just human nature to do that, to get through it on your own.
Yeah, absolutely. Unfortunately, that's the case, right? So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it, and how did you overcome it?
In real estate or in
Yeah,
life?
in real estate, yeah.
In real estate.
Or if you can't think of real estate, you can talk about life if you want.
So I mean, there were a number of moments like that. One of the moments was when I was invited to speak at a conference, and I was told that there would be 200 people at that conference, and the largest I spoke until that moment was maybe at a group of like 10, 15 people. So that was pretty scary. So since I knew about the conference 6 months or so in advance, I decided to take a speaking course in the city. So I found someone who was like a theater advisor, and it was still like pre-COVID days, a while ago. Excuse me. So I took that course, and it was done in the actual real theater, and it was phenomenal. It helped me exponentially. And when I arrived at the conference, I was shocked to hear that instead of 200 people, there will be 600 people at the conference. But I was well prepared. I felt confident. And based on the feedback that I received afterwards and still receiving to this day, I did a good job. I presented really well. People benefited from it. It was, but it was a tough moment. I was not prepared to do that in the first place. So that course helped me a lot.
Yeah, well, it seems like you're kind of like me, right? You just kind of say yes, right? I'm kind of guilty that I say yes, and then I'm like, oh, what did I get myself in for?
Exactly. That's exactly how I felt. Exactly, Barry. Yes, thank you.
Yeah, but I think it's better to do that, right? Because then if you don't say yes, and if you don't move forward, and if you don't do things that you're not comfortable doing, right, you don't really grow as a person. I think I'm big
Yeah.
on I do it all the
And
time.
you regret.
I do it all the time, and I regret doing it a lot of time. Like, oh, why did I do this? But then once you're on the other side, right, I'm sure once you've delivered that speech, as nervous as you were before, you felt fantastic afterwards, maybe, right?
I felt phenomenal. I felt like, I could move mountains after that. Yeah, it
Yeah,
was a great feeling.
yeah,
Absolutely. And it opened up doors to a lot of other opportunities and a lot of other conferences that I spoke at afterwards. So yeah, I loved it. I absolutely, I actually, I have to go back and because I enjoyed the experience I had in New York at that theater. I mean, who would have thought that a former accountant turned IT professional turned real estate investor would go take a theater class in a city and to present on some real estate stage. That was amazing. And I met a ton of like city people that are presenting at various stages for various reasons, and I'm still friends with a lot of folks that took that theater class with me. So I love that experience.
and then now you're performing on Broadway every week, right?
Yeah, exactly. Yeah, virtually.
Yeah,
Virtually.
that's good. Awesome. Well, I love that. I think that's another like you hear certain things from successful people, right? And it's like doing what other people want, right? Okay, for one, you said yes to this thing, and then you're like, okay, I want to do a good job. How do I do a good job? found
Right.
someone in theater, right? Because it's a performance, right? You're performing on stage, found someone in theater that could teach you, and then they taught you, and you were willing to accept what their teachings was, and then you learned that, and you delivered a great speech. So I think there's things that you see and hear from successful people. So I just wanted to point that out. I think that's cool that you did.
And it's an investment, and I want to make it clear that everything is an investment, but you look at it from a long run. What is the ROI on this investment? Why are you doing what you're doing? Because you get what you pay for, and if you pay for a class with someone who is professional, who knows how to deliver things, you will get the results, and that's what happened essentially. So yeah, it was an excellent experience. I really enjoyed it.
Cool. Well, Alina, thank you so much. It's been a really fascinating interview. I really enjoyed talking to you. It's a shame we've got to cut it to the end, but it's been so insightful, and hearing your story and what you've been up to and what's coming next for you is really cool to me.
Thank
Before
you,
we go,
Barry.
but before we go, where can people find out more about you if they want to reach out to you, get in touch, all that good stuff?
Sure. They can find me through my website, which is samofinancial.com, or on social media. I'm on LinkedIn, Facebook, and Instagram.
Perfect, perfect. And I'll put the links in the show notes and the description below. Well,
Absolutely, absolutely. And for folks that are starting out in real estate and want to know what area of real estate is right for them, that haven't figured it out, I actually put a course together on how to select the best real estate investing niche for yourself. It's on Udemy now. I can give you links for that. And for folks that would like to learn more about diversification and why diversifying is important, I have an ebook that I put together. It's like a report, more or less. I can share the link with you as well for that.
perfect. I'll include all that. So that's some great resources for people who are just trying to learn more and more. So awesome. Thank you so
Sure.
much, Lena. Great conversation, and have an awesome rest of your day.
Thank you, Barry. Pleasure being here. Take care. Enjoy.